The Index podcast is brought to you by our staking partner, Marinade Finance. Their latest release, Marinade Select, offers a smarter way to stake, featuring a curated set of high-performing mid-size validators handpicked for yield, professionalism, and their role in making Solana faster and more resilient. Learn more and start staking at marinade.finance. Welcome to the Index. I'm your host, Alex Kehaya, and today I'm joined by Jim Hiltner, co-founder and head of business development at Superstate, a fintech company that bridges traditional financial assets with crypto markets, boosting liquidity and driving innovation through on-chain public listings and tokenized investment products. Jim, thanks for coming on the show.
Thanks for having me, Alex. It's great to be here.
So I feel bad because I honestly don't think that blurb even does justice to how innovative Superstate is and what you guys are building with Opening Bell. But before we get into let's talk about why. What gets you out of bed in the morning to build Superstate, and what's kind of the genesis story? Talk about your background. Let's spend a couple minutes on that.
Yeah, absolutely. I mean, got to give a lot of credit to the marketing and branding team for trying to synthesize all we're doing in a couple of sentences. But to your point, there's just so much that we're trying to build, and I think the market's starting to realize all of the opportunities that this new initiative is going to create. So a bit of background on me, I started as many of us probably in the TradFi world, doing a bunch of regulatory reporting in the back office of Citibank and not really enjoying some of the systems that were in place and, the lack of opportunity that I really saw in kind of a future career path at like a big stodgy institution like that. And so, kind of moved myself into the fintech world, spent about 7 years in the equity research space, building a company called Visible Alpha, wildly successful company there that was pretty innovative in the way that it was helping the buy side analyze company financials. And then, got a call from Compound a couple of years later as I, was investing on the side in everything digital assets, but never had the opportunity until then to make it my career. And so I joined Compound back in 21 to help run institutional business there called Compound Treasury. That business was helping institutions get access to yield on DeFi, but as the case was then and is starting to become less so now, they were not ready to set up a wallet and hold stable coins. They didn't even really know what stable coins were then to earn yield, but they saw like a 8% yield in these protocols when Fed funds rate was at zero, and they were like, how do I get access to that? So Compound Treasury built that bridge. It was a great product, had a couple $100 million in assets under management at its peak. And then as we saw the market unwinding, with all the leverage and the centralized desks that were falling apart, DeFi kept humming exactly as designed. The beauty of smart contracts and 24/7 risk management that's open out in the public and is completely autonomous. There was no bad debt on the books of many of the largest protocols out there, and the opportunity that we saw was that we could tinker around with those systems and build new liquidation mechanisms or launch on new chains or create new experiments in the DeFi space. But the challenge is the addressable market at that stage was limited to tokens, and it wasn't compatible with the traditional securities market. So the genesis for Superstate was we all kind of looked at each other. So Robert Leshner, who's the founder of Compound, is the CEO of Superstate. Myself and two others that were working together said, why don't we go try to attack that problem and bring bigger markets to DeFi? So we launched Superstate back in 2023, started with an asset management business, has a couple $100 million in assets under management today with two proprietary funds that we run, one of which is a money market fund. We've got, a bunch of T-bills sitting in a very old school custodian behind the scenes. But from an investor standpoint, they're able to, buy and sell with stable coins. They get 24/7 NAV, which is, every second increasing the yield that they're earning so that they're not doing day by day accounting. And that's not locked to Monday through Friday like the traditional system is. We built a carry fund as well. It's called USCC. There's about $200 million in that fund today, and it's running the basis trade, but we do that largely through institutional venues. So trading CME futures and, buying spot Bitcoin, ETH, and SOL to capture the spread between the two of those. So still a cash management type of a product for investors that they can hold their shares as a token, but the strategy under the hood isn't just holding T-bills. So those are two funds that we built, and through that experience and the infrastructure that we built underneath that, demonstrated that we could do that for not just our own funds, but for other types of products as well. And so Opening Bell is our recently announced equity issuance platform. And so the underpinning of that is a SEC registered transfer agent, which is really important. We work directly with issuers to help them bring their equity on chain. And we do it in a way that helps scale access to these amazing companies that right now are locked into your traditional brokerage accounts. But by tapping into on-chain markets, there's a ton of users and demand and integrations and utility that you can unlock by just making them compatible with things like Solana and Ethereum and your very favorite networks that are out there. So we are about to announce in the next couple of weeks some pretty big issuers that are going live with us. We've already announced Sol Strategies and Upexi, who are great companies that are also working with us to bring some of their shares on chain. And we're excited about bringing our crypto native technology and distribution skills to a very large addressable market in the equity space, and helping improve access, liquidity, and secondary markets that is really not possible in the traditional system.
I can't say the name of the company just yet, but I think by the time the show comes out, I'll be able to tweet about it. But we're talking with you guys, ABK Labs and Mike and Superstate, in partnership with a publicly traded company to list equity of that company on through your platform on Solana. And it's going to be a digital asset treasury company primarily focused on Sol. And I just, in talking to your team, got so excited about the art of the possible with what you guys are doing. But before we get into what the future looks like, can you just talk about Opening Bell a little bit more, and maybe with the example of a new company coming to you that wants to issue equity on through your platform on Solana mainnet? Talk about what that process looks like, what it's been like to get to that point, because I know you have had a lot of contact with the SEC. To the extent you can share, walk people through what that experience is like for issuers and how you've worked with the SEC to make sure that this is all buttoned up and a good experience for everybody involved.
Yeah, absolutely. And maybe even take a step back. Superstate went to the SEC 2 years ago and said, hey, we're going to launch a tokenized money market fund. And they weren't ready to have that conversation. It's clearly a different regime now. So we're really excited about the engagement with the task force to push through innovation in America and do it in a highly compliant way that leans on the existing regulatory framework that created the robust capital markets that we have in the US today, but add new technology on top of it to make it better for investors and for companies and so on and so forth. The way that it works, I mentioned that transfer agent, it's, everybody can go look it up. It's basically a cap table manager on behalf of any issuer. And so, what it does is it helps with any purchases, redemptions, or, any trading of stocks, just managing who the actual owners are on the cap table of the issuing company. In the traditional finance world, there's a whole layer cake underneath the company, the transfer agent, and then the investors of broker dealers and DTCC and so on and so forth. That basically creates, a wide gap between the actual company and their end investors. The approach that we've taken, which is wildly different, is the cap table that we manage actually shows Alex and Jim as shareholders of the token, which is the actual company's equity in their wallet, which is really novel because, again, in the traditional world, the way that it works is, securities are issued by a company and they go and they sit in a vault basically with the DTCC, and they sit largely in the name of Seed & Co., which is, the kind of the DTCC's custodian, I guess, that's holding all the securities. But on top of that are broker dealers that have, maybe let's call it 5 broker dealers that have millions of customers. The actual securities are held in street name, with the broker dealer on your behalf. And so, Alex, who's owning these shares, is not really directly visible to the underlying company, except for multiple reports that kind of unpeel the layers of that onion. But the way that Opening Bell is purporting to create a new regime is to allow for the company to issue their shares directly on chain as tokens and have Alex hold them in his wallet. So how the sausage is made is, we're, setting ourselves up directly with a relationship with the issuer. It's not 1,000 stocks or ETFs that we're going to launch day one, but it's, every company that we have a relationship with now has control over the issuance and the distribution of their shares into where they go on chain. And it opens it up to a global audience. Like, yeah, we're US based and we have SEC licenses, but what that enables is investors from Europe or Africa or Asia to be able to hold the assets. And also, really importantly, investors in the US, which is obviously, the biggest capital market in the planet. So we work directly with a company to say, hey, you want to issue your shares. If they have not IPO'd yet, we help, kind of with registration and what they need in order to be able to register with the SEC. But if they are already publicly traded, they basically, add us as a co-transfer agent to their existing transfer agent on the traditional world. And we're responsible for all the shares that are on chain. And so the onboarding and setup is really quite trivial, but the magic is now the option for the investors that want to hold your stock can do so in their Phantom or in their MetaMask or whatever wallet that they've KYC'd. And, that opens up now, once you have the investor base, integrations into DeFi. And, given our DNA coming from Compound, one thing that we bring to the table that I think is really important for a lot of the protocols out there is they're all saying, hey, RWAs are going to be massive, but how do I actually get access to them, and how do I integrate them, and how do I make sure that all the things that we're doing, whether it's trading or lending, that it's done compliantly, and that the issuing company or the regulatory side of it is done properly. So we spend a lot of time with various networks and various protocols to ensure that when they're integrating these tokens, that they're doing it in a way that still satisfies the underlying regulatory obligations. And it sounds, pretty simple, but it's actually a lot of work, because you have to think about, an allow list. There's a bunch of addresses that are allowed to touch this. What protocols are going to be able to support it, and how does liquidations work, and how do liquidity pools work, and transferring LP tokens, and so on and so forth. So there's a lot of infrastructure that Superstate helps bring to the table with all of our DeFi partners to ensure that we can seamlessly integrate into those systems and enable the secondary markets and all the things that we love to do with all of our tokens today, but do that with the actual stocks that we're now holding as well, too.
Yeah, that is the part that I'm probably the most excited about. Because I think the 24/7 access to these assets, ability to issue and trade them 24/7 is already huge, because it opens up the global market, which is not actually people probably don't realize this, but somebody in Asia can't just trade stocks 24 hours a day, 7 days a week. In fact, there are some pretty big gaps in the windows that they can actually do that because of the time zones alone. And that limits capital markets. And this is where I've been talking to a lot of people about this idea of internet capital markets. And I've been sharing this article that the Helios team wrote. I think you've probably seen that floating around. It was a really great article about like the idea and the power of the idea of internet capital markets. And you guys sit right at the middle of that unlock. And I think Jake Berkman, who's a friend of mine, he's a GP at Coin Fund, tweeted like, what's your thesis like for crypto for the next 12 months? And equities coming on chain is one of my biggest theses. I think it's going to explode, and that Superstate is right at the center of that, making it possible. And when you unlock this DeFi stuff, now, I mean, you need to work with SEC on it, is my understanding too, to like give it the green light. But once we have that green light for that particular part of this idea, you can provide liquidity on an AMM, on an automated market maker, and earn fees. Like, I think, like, just for people who may not have played in DeFi, I can take USDC and I can take my own stock, whether I'm the issuer or just an investor, and I can pair it with USDC in a pool that's a trading pair. And then when people buy and sell my stock with USDC or for USDC, I earn fees. So I'm pretty sure, correct me if I'm wrong, but you cannot earn fees off of volume anywhere else.
No, I mean, there's a couple of things to unpack there. So to what you're just addressing there, I mean, you can't even swap, your Apple stock for NVIDIA stock, right? Like, you in your brokerage account have to go back to cash and let it settle and then buy it again, or buy the other share. And like, yeah, maybe you can trade on margin, or there's more, even all the exchanges are working through faster settlements and bigger, broader market hours, which I think will help unlock a lot more utility for investors and give global access to US capital markets. But there's still, a lot of limitations, because you're working with an intermediary that gives you certain rules of the road of things that you can do. And so whether it's like lending your assets out there's certain parameters and economics that are associated with that. If it's, holding your assets, you can't, they're maybe lending it on your behalf if you don't know about it. So the control for you as an investor to maximize your economics, if you so choose, is what DeFi is all about. I mean, that's why we love Compound and Aave and Uniswap and Morpho and Radium and Orca and Camino, and I could go on and on and on. It's because it gives the investor the ability to control how their assets are being used and give them new economic opportunities that are really difficult and have high barriers to entry in the traditional world. And like, one thing that you highlighted, which I think is, kind of fascinating if you really think about it, is that people in Asia's time zones have 0% overlap of the US capital markets. So you're talking about a massive investor base that loves, all the companies that are filing and launching here in the US. But in terms of accessing those markets, they're on the other side of the world. And so I don't know too many people that are up at 3 a.m. trading stocks. Maybe I'm sure that there's a lot of degens that listen to this that are probably doing that. But, when you have 24/7 markets, you now get to live your day to day and still be able to access these things without having to, set an alarm clock to be able to make the market open in the US. So it just opens up, distribution, and as well as like a better customer experience on the other side. And, some of the things that we're hearing from a lot of our issuers is that, there's limited access, but there's also limited utility. And so from an issuer standpoint, they want to be able to know who all their investors are, right? And like we give them direct visibility into that because we know exactly that Alex and Jim hold their shares in their wallet and how many they hold. And Alex traded 5 shares, so he's no longer an investor. And now Bill is great. Like we have that information. But there's also a lot of things you can do with tokens that, are unique that don't exist in the, maybe I want to like stake a token of somebody's equity and I get a special dividend for that because I've been holding it for a certain period of time. Or there's special on-chain dividends that if I hold my shares in this particular network, I'll get, more USDC versus the dollars I would have gotten in my brokerage account. There's just so many different benefits to that. And then when you think about the composability of it, what I think will be really interesting are the asset managers that now kind of look at their operations where, they're building indexes or active strategies or whatever it is, being able to execute that 24/7 in a market where, tokens are really accessible, but it's still the same underlying great companies that they want to put in their strategies. It just like makes their process a lot more efficient and not needing to lean on the like legacy capital markets for all that.
I was really excited about these incentive structures that you were talking about. That was actually my next question for you because we've seen a lot of things that if you look at sideways the last like 5 to 10 years in crypto, you're going to be like that. These people are insane. Who are these degens in the trenches with these meme coins and yield farming strategies and, ways to stake your tokens and then you earn a different token. All that stuff did, on its face look a little strange. And I think it's very similar to like how Jeff Bezos was probably looked at when he was selling books on the internet. People are like, you're building an online bookseller? Like, what are you doing? But now you take those same mechanics and allow people to, you can incentivize people to, for example, hold your stock and just for holding it or staking it in a liquidity pool, providing liquidity, and they've held it for a certain amount of time. And then like I'm excited, like you mentioned, they can earn like more dividends off of revenue. That's one strat thing you could do. Another thing is you can airdrop them tokens in other entities that you might have control over or own, right? Like you might have like a product that spins out or a company you buy or I don't know what, but like there's a lot of different creative mechanics you can now experiment with that for the equities market, it's going to be very experimental. But for us who've been playing in DeFi for a while, it's actually like this has been happening for years. And I just find that really, really interesting. I did see a tweet by, what is his name? Chris Bernesky saying that like all the TradFi companies were going to repeat the same mistakes that we did over the last like 5 years. And I actually don't think that's going to happen. I think they're going to take advantage of all the great things that we've done and the great innovations and not make the same mistakes because they're so regulated. And so that's what's cool about you guys tying this together.
Well, they're more regulated, so they're going to be more measured. And there's, obviously a large spectrum. You might have like pension funds and endowments on one end, and you've got hedge funds on the other end. But like, the opportunities that this will create are really endless. And I think the big difference about why now is kind of twofold. Like one is like, when's the last time, maybe in the last couple of months, that you've heard about like a material DeFi hack? I mean, these systems have gotten so hardened because of the amount of uptime, the amount of attention, the amount of like pen testing that they've had, for the last, couple of years. This stuff wasn't really that feasible from an institutional standpoint up until now, let alone the regulatory side of it. It's just like the technology has gotten so much more sophisticated. Aave is now like one of the top 50 banks in the country. Like, it's insane the scale that all these systems have gotten to, and processing so much activity that now you have like institutional understanding of what we have all been pitching for a number of years, that these systems are viable to use. And I'm sure when email first came out, everybody was still sending letters until they felt like it was a viable mechanism for them to send a note to their grandmother or whatever it is. So that's just a natural evolution of technology. I think the other thing too that you point out, which is, meme coins have been fantastic for a lot of retail attention and adoption, but they've also been a very big benefit to all the systems and the infrastructure underlying it. Because, one of my favorite stats is something I was looking up the other day is, so Pump Fund raised, $600 million in like 12 minutes. The capital formation that's possible is phenomenal because you have all these global investors that want access to great things, whether that be protocols or companies or NFTs maybe. But you have serious demand, and these systems processed it seamlessly. Like, there's no hiccups in the distribution there. It also, like when Trump meme coin first launched, there was like $20 billion of volume in a 24-hour period. I mean, that's a lot of money. Obviously, it's one of the most interesting things that's launched in crypto in a long time. But if you look at what Coinbase did in their 24 hours when they got added to the S&P 500, it was half of that volume. So the scale of what's possible is comparable in certain pockets. It's not widespread yet, but it's comparable to what's possible on legacy exchanges and infrastructure that's been around for decades. And that just goes to show that we're at this inflection point for bringing capital markets on chain that, now is the time to do it because of the regulatory posture, because of, the systems, and also because of people like Superstate that are really taking a very transparent and active approach with the SEC and with other regulators to make sure that what we're doing is not totally disrupting the traditional capital markets. It's adding net benefit, but still following all the rules and making sure that investors are protected, that there's transparency, that there's visibility, that there's audits, and that there's all the right kind of frameworks in place to instill trust, but now do it in ways that, the legacy systems are not supported.
I totally agree. And I think I did this video about Helios's article about internet capital markets that I'm about to post in the next couple of days. And I start out by just saying, I don't think people understand just how big Solana is going to get and how big internet capital markets actually are and what that means. I mean, we have multiple different opportunities that are, I would classify as being under the umbrella of internet capital markets that are trillions and trillions of dollars in TAM. And it's going to accelerate very quickly. I think you guys are going to launch and the floodgates are going to be open you're going to get the first couple of examples that are going to show the rest of the equities markets, the entire Fortune 500, Fortune 1000, basically every publicly traded company on the planet. And they're going to see that and they're all going to say, oh, we need to do that. And the cool thing is there's serious people and serious teams doing this, right? Soul Strategies, Upexi, the guys that I'm working with, the board members of these companies, these are not degens. I mean, some of the guys that they're merging, right? They're bringing the degens in, but they are really serious, really smart, PhD level folks. And I think it's going to bring a ton of credibility to the space when they see these launches be really successful. And then you all are going to need to hire more people. I don't know how you're going to manage I think the growth is going to be crazy.
The beauty of technology is that you don't need a lot of people. I mean, I look back at Citi was 100,000 people, and we've got less than 30.
Yeah. You won't need that many. I just think there's going to be so much demand. It's going to yeah.
Yeah, I think so to your point, I mean, yesterday Figma updated its S1. So they're going public. They're one of the most successful tech companies of all time. Fantastic product. We use it here at Superstate. And, they added within their disclosures the potential for the future exploring tokenizing their shares. And so what's interesting to me in that case study is that, Figma has a bunch of Bitcoin and ETH, I believe, ETFs on their balance sheet. So they're definitely crypto native and they see the value in holding this from a company treasury standpoint. But they're also out forward looking at what does distribution look like? How do I reach all my investors that, I need to keep this door open so that if these markets really take off, that I have the ability to participate in it. And Figma is not a crypto treasury company. They are a graphic design software business. And so I think you'll see a lot of companies decide to partner with companies like Superstate in order to help them get on chain. I think the market has really exploded in tokenized equities. And I think, the last couple of weeks in particular, there's been a lot of announcements and a lot of trials and tests and new products that have been brought to market, which is awesome. You need a bunch of experimentation in order for something new to thrive. And we take a different angle than everybody else does. But I think one thing that's really interesting that we hear from a lot of our issuers is that having 17 different versions of the same stock fragmented across different liquidity pools and distributed into a bunch of different networks where there's not a lot of visibility or control over that. It's that's definitely concerning, I think, for some companies. OpenAI tweeted that they didn't have a relationship with Robinhood after they made that announcement. And so there's definitely, at the board level, attention being brought to these kind of things. I mean, yeah, it's more of a bid for their stock and there's a lot more, activity happening. As volume picks up, it'll become more material. But I think what's important about what Superstate, and there's a few others that are kind of following a similar path, is that they're trying to find one single source of truth for the actual equity that's minted and issued on behalf of the issuer so that investors know what they're buying. There's no additional intermediaries added on top of it and fragmented liquidity of 17 versions of the same stock. And so you have one single token that is commanding liquidity and market share that is actually approved by the issuer. And that's where the transfer agent license that we have strategically is something that's very important to a lot of our issuers to make sure that they know exactly what's happening with their stock, which is, one of the most important artifacts of their business.
Yeah, there's definitely a right way and a wrong way to do this. And I think the way you guys are thinking about it is totally correct. It's not a mirror token. There's no SPV involved or something. It's literally just the equity and you're issuing it on chain. And I, as a holder, am self-custodying it and able to use it however I want. And I can exchange it for any value that I want. It doesn't have to be, like you mentioned, it could be for some other token or stock or whatever. And I love that I can just use it on any platform too. That you just whitelisted the wallet. So whatever wallet I want to get KYC'd, that's my identity with you guys. And I can then trade with that wallet on any exchange on Solana or whatever network it is that you guys support. I think that's pretty cool.
Yeah, and it's equivalent to the same shares in your brokerage account, by the way. So if you wanted to take it back to Robinhood or wherever to hold your shares somewhere else, that's the beauty of this is it's not a mirror. So you don't have to redeem it for cash, because it's a tracker of the underlying equity and then buy it again back in your brokerage account. You can, these are not frictionless. The bridge is, still, made of right. It's made of Scotch tape and bubble gum, but it's getting there. And the great thing about Superstate and, credit to the issuers that we've been working with thus far is that the traditional transfer agents are actually open to engaging to help make this a possibility. They're realizing that their clients, which are the companies that are issuing stock, are wanting this. And so there's a lot of partnership and collaboration that's happening with a number of large transfer agents that Superstate's embedding itself into to say, hey, let's just make this process super seamless and give investors the choice. If they choose to go on Superstate, great. If they choose to go back to you on the NASDAQ, that's fine too. This is all completely, transferable. And yeah, it is janky to get started, but over time it'll get much better. I think one key thing, and you had asked about it, but I didn't touch upon it earlier, is that Project Open. So Solana Foundation, Superstate, Phantom, and Orca have kind of come together, and there's a number of unnamed other folks that are really active helping behind the scenes, is working directly with the task force to do a few things. One is, can we issue securities on chain? The answer is yes. We have all the clarity that we need to go and do that today. And, that means that I can have Sol Strategies shares in my Phantom wallet held, directly on Solana. The next step to this process is getting secondary markets unlocked. And so one thing that Paul Atkins and the whole commission have been working towards is understanding secondary markets and how does a liquidity pool work and how does KYC and whitelisting work and ensuring, that the distribution is safe and sound and whatnot. And that these are peer-to-peer transactions that take place underneath the hood, but it's not an exchange with, a bunch of order matching. It's autonomous technology that is allowing you and I to find each other on the internet, kind of like we used to do back, hundreds of years ago when my ship and your ship were still kind of floating in the harbor, and like hand each other certificates and like exchange them for bread or dollars or pounds or whatever it was. Like, this is possible, but the like regulatory apparatus is specifically looking for innovation exemptive relief in order to allow that to flourish. So when we launch, it's going to be minted on chain, peer-to-peer and OTC type of transactions, some RFQ networks that we're working with to get set up, which is, request for quote for those that are not, thinking about capital markets every day. But basically, AMMs and the full liquidity pool thing is something, second half of this year for sure, and we're marching towards that on a rapid basis. But that's where things are going to get really interesting. As soon as like the SEC says, yeah, this is ready to go, then like your Orcas and Radiums and Uniswaps of the world are going to be able to list these securities for the types of LPing and trading that you described.
Well, I couldn't be more excited. And I'll tell you what, I'll be one of the first people to, at least I'm not the actual issuer, it's the company that we're working with, but that we're partnering with to lead the Solana strategy for. But we will definitely be one of the first issuers to participate in that in the latter half of the year. Really excited to adopt it. And I feel like everybody's kind of making history together, and that, a year from now, that whole space is going to look real different. One other thing we haven't touched on that I would like to really quickly is the other dark horse, I think, which is agentic finance. I think that especially in crypto, AI kind of had like a downturn the last 6 months from a tokens perspective. And AI agents are not really a thing yet. They're becoming a thing, like even in Web 2. So it's really early. But I think that one of the protocols we're working on with Coinbase, and that whole thing started because Namil, the head of their developer platform, came on my show about 2 months ago and told me about X402, which is the ability to pay for things via HTTP. And I think that this is going to go live on Solana pretty soon. And once it does, if you have now combine this internet capital markets and all this deal flow and all these equities that are coming on chain through you guys, with the ability for anybody in the world to just very quickly get an AI agent that can pay for any API or anything, like you want to make a trading bot, you can just do that. You can vibe code that in 10 minutes probably in the future. I mean, I don't know if it'll be that easy out of the gate, but soon. So yeah, you'll have all these AI bots that are doing the trading for you at the speed of light. And that you can't do that. Retail doesn't have access to that on the on the NASDAQ, right? That doesn't exist. Even regular developers, even a solid engineer, doesn't have access to that. The ability to create any of these financial products or an application that allows you to do any kind of trading, the overhead is massive. And you guys, in between all the other products and protocols and stuff, and what Superstate is doing, we're bringing it down to near zero, right? Friction to do this. It's near zero relatively to we were up here in difficulty and now we're down here, super low.
Yeah. I mean, it's interesting because everybody goes, well, most people go to a financial advisor and they say, hey, here's my portfolio. Here's my risk tolerance. I'm looking for, whatever type of it's all relatively cookie cutter. It's not necessarily custom tailored to every individual life event. They just don't have the time and bandwidth to be able to sit there and 24/7, manage your assets. And so, as more and more of the traditional markets become compatible here, I think you're 100% right, where everybody's going to have an agent in their pocket that's going to be working specifically for them. It's going to know everything about, their life situation, their, needs and wants, and it's going to synthesize information for them that otherwise would be untenable. I mean, as an operator, it's hard for me to sit and read some equity research report and figure out what's going on in a particular company. So, the activity that I'm capable of personally doing is limited by the bandwidth that I have. And I have a 2-week-old daughter. So it's very limited these days. But if I have some agent that's programmed that can get access to market data and information, and then also be able to execute on my behalf, it will make my financial portfolio a lot more efficient. And so token-based underlying securities that can fit inside of, a new on-chain betterment or, that type of robo-advisor is going to be really powerful. And again, it kind of goes back to the point, we're super excited about getting stuff on chain, unlocking DeFi, but that's, what's existing in the market today. The secondary, tertiary, and beyond applications and incentives and things that can be built on top of all this none of us can comprehend. I mean, when stablecoins first came out, there wasn't a whole lot of discussion like there is today on embedding it into payments and remittances and so much that is now become commonplace on this underlying building block that we feel like is going to happen in the securities world as well too. But you got to get the building blocks built first and do it the right way so that they have staying power. And then all the creative minds in the developer community and, the financial industry and so on and so forth can start to, layer on really cool, interesting experiences that we're going to all do as our day-to-day financial, management that, my daughter will probably never log into an old school brokerage account by the time, she has any assets to play around with. It'll be all on chain.
Yeah, I agree. I agree with you 100%. I think, or all those guys need to, they're all going to get left in the dust because all the liquidity, all the equities are going to move. They're going to move over. It's just too good. It's too much of a value prop.
To their credit, though, I tweeted this the other night. I'm actually really bullish on banks and TradFi that's leaning in. And, to TradFi credit, there's a lot of big asset managers and a lot of big banks and, so on and so forth that are really, figuring it out. And the reason why they're figuring it out is because they actually kept the momentum of their research and understanding and engagement with this industry since the last cycle. And they're starting to see the fruits of their labor pay off. And it's BlackRock did their fund with Securitized. It's amazing. Superstate has built our fund with a big TradFi $800 billion federated Hermes as our asset manager underneath the hood there. There are a long list of similar institutions that are looking to find their way to get into this space because they know that this is the future. And so they're not just going to sit idly by and watch this all get disintermediated. They're going to be very active. And I think you'll see a lot of progress on that in the years to come.
Well, that's really cool to hear. So we're getting towards the top of the show, and I always ask this question, but what have I not asked you that I should have asked?
Oh, man. When do you think, I think the biggest question is when do you think there's going to be $1 trillion in DeFi? And I don't think it's next year. I think it's 2030 or beyond. There's a lot of progress, but we're still so small on this curve. Everybody's so excited about RWAs hitting $25 billion. There's $7 trillion in money market funds that are still out there waiting for it to be tokenized. And so that's not going to happen overnight. As I described, all the big institutions and the distribution platforms, they're all going to be there. Once 401k plans and baby boomer wealth transition happens, that's where a lot of this really starts to take off. And so while we're really excited by all the progress that's been made, there's still so much to be done. And, it's brick by brick, it's day by day, it's minute by minute to figure it all out. And, I think we sit in this really interesting, position in all of these markets, kind of at the nexus of all of that. And we're seeing big companies, small developers, venture capitalists, big allocators on the institutional side that are all trying to figure this way out. And, the watershed moment I think is around the corner, but it's definitely not tomorrow.
So, I love that. I love that you brought that up. And I tend to be pretty aggressive as a person. And so whenever I hear that, I love that you put the stake in the ground of the goal is 1 trillion, and I'm I see your 2030 and I raise you to 2028.
Let's do it.
I hear you though. You know a lot more about this than I do. And I think getting to $1 trillion would be very, very cool milestone to hit. And there's lots to build. I've honestly, it's funny, after all these years, I've never been more excited than I am right now to be in this space. I feel like we finally hit the place. I joined the industry in 2016, and I feel like we finally got to where everybody said we were back then, but we were definitely not there. And so I think we're here now. I think we are actually where we think we are.
Definitely not. No, and this might be a top signal, but I'm getting texts from my father saying, hey, I saw Crypto Week in America pass the Genius Act. And so, it's definitely hit the mainstream. And it's great to see the fruits of our labor starting to pay off.
Yeah. All right. Well, thanks so much for coming on the show.
Thanks, Alex.